On higher ethanol gas blends, analysts say it'll help the GOP gain favor in the nation's farm belt and right before the midterm elections. But the country's largest oil group is against it. It says lifting the ban will eat into the industry's market share of gas sales. President Trump is also reportedly going to add restrictions on trading biofuels credits. The president is probably going to continue making his case that his aggressive approach to trade is benefiting Americans. Mr. Trump also recently announced a revised trade deal with Canada and Mexico. And for more on all this, I spoke with Tori Whiting, a trade economist at the Heritage Foundation. To begin, I asked her to help us unpack the new agreement with the U.S. neighbors to the north and south.
As you know, we have a new renegotiated NAFTA 2.0, or the United States-Mexico-Canada agreement, whichever name you'd like to apply it to. But some of the key things in this agreement are changes to the rules of origin. There are also some changes to providing a sort of sunset provision, changes to government procurement. The United States got a little bit into the Canadian dairy market, and there are a lot of other technical changes, and really it was about giving the agreement a facelift for the 21st century as well.
Do you think President Trump's more bare-knuckled approach to trade to renegotiate NAFTA worked in this respect?
Well, I would say not as much as you might think. And the reason I say that is because a lot of the modernization aspects are really just a cut and paste from the Trans-Pacific Partnership, the agreement that the United States left at the beginning of President Trump's term. And then the other changes to this agreement are actually not really going to create a more free trading environment for the American people. It's actually more about managing trade than it is about opening and facilitating free trade.
As far as consumers go, will this affect what we pay for goods? Higher, lower? How does it affect us?
Well, I think that's still to be determined. But anytime that you see additional regulations added on, I'm speaking here specifically looking at the automobile industry. So they're increasing what we call the rules of origin, so the margin of North American content that has to be in a vehicle for it to not be subject to tariffs. And so, we're seeing those margins being increased. We're also seeing a provision in the agreement that would require a $16 minimum wage for a certain portion of the production process. And so it could be possible that those changes would have a negative impact on consumers who want to be able to buy automobiles, because it could cause some rejiggering of supply chains that could increase prices.
President Trump is already pitching this as a win for him on the campaign trail as he moves into midterms. He's visiting several states this week, and he's expected to continue to make his case that the tariff policy that he is advocating is good for Americans. The much larger issue is his trade war with China. Do you think that's having a positive or negative effect on American consumers or businesses, particularly with farmers?
Well, I have to say that I commend the administration for maintaining the trilateral nature of NAFTA. I think that aspect of it is a good thing. But what we didn't do is get rid of the steel and aluminum tariffs that we'd slapped on our allies, which should have happened from the outset, and really, in the end, should have never been imposed on Canada and Mexico. Now, we are absolutely right to be addressing trade concerns with China. But what I think is that the administration is taking the wrong approach in addressing those concerns. So their concerns are about intellectual property violations. They are about restrictions on investment. And those are very well-founded concerns. But taxing the American people with tariffs is not the right way to go. And I think that as these tariffs continue to escalate, we will see more of an impact on the American people. If the president decides to impose tariffs on all Chinese imports, which he's said that he is willing to do, another $267 or so billion tariffs on those imports, then Americans will really start to feel the effects. Right now, it's mostly been on goods that businesses buy, and so they're able to kind of mediate and pass down those costs a little bit, and so it's not quite affecting consumers directly yet.
President Trump has argued that other countries, China included, are ripping off the U.S. Does he have a point there, or what would you recommend him to do as far as an approach to trade with the rest of the world?
Well, I'd say that's absolutely false. The reason that individuals trade, countries don't trade with one another, individuals trade. People in the United States trade with millions of people around the world. And we enter into those transactions willingly. We enter into those transactions because it provides a mutual benefit. It's the same thing as if I go to the grocery store to, say, buy an avocado. I'm gaining because I'm getting the avocado that I want and able to make guacamole, which is great, year-round because of trade with Mexico. And the store is getting my money, which they go then to invest in their business. And then the Mexican farmer also gets to benefit because they're selling those goods into the U.S. market. And so everyone is winning. And it's not about who is getting the dollars, but it's about where is that mutual benefit. And we wouldn't trade if it didn't benefit us mutually.